Ahead of the weekend, oil prices are expected to rise on Friday for the first time in more than a year due to growing tensions in the Middle East, which have dampened global markets. Most equity indices and stock futures were in the black, but gains were restrained as investors speculated that Israel could imminently carry out retaliation strikes on Iran. The greatest weekly gain in Brent crude prices since February 2023 was predicted to be approximately 8%, while the biggest weekly increase in US crude futures since March of last year would be 8.2%. US President Joe Biden's statement that he did not think there would be an all-out war in the Middle East may have comforted the markets. However, he did earlier imply that the US was planning strikes on Iran's oil facilities as a reaction to Tehran's missile attack on Israel.
We're in discussion with that. I think that would be a little... Anyway.
Even though oil prices have rebounded from their low foundation and are back to levels they were only a month ago, global markets and investors' willingness to take on risk are starting to feel the pinch. Investors may need to review their inflation projections if geopolitical tensions continue to escalate and oil prices climb. Jerome Powell, the chair of the Federal Reserve, may have been partially motivated to say that the US central bank would probably remain with quarter percentage point interest rate decreases going forward due to the possibility of escalating hostilities in the Middle East. He would not want the Fed to loosen policy too soon, only to have inflation spike back up. Along with numerous presentations by European central bank policymakers, the day will also feature one by Bank of England, BOE, Chief Economist Hugh Pill. It is indefinite if Pill will adopt the same cautious stance as his boss, Andrew Bailey, who stated that should inflation pressures continue to decline, the BOE may act more swiftly to lower interest rates. Good news elsewhere. US ports on the eastern Gulf Coast started reopening on Thursday night following a pay agreement struck by dock workers and port managers to end the largest work stoppage in the industry in almost 50 years.